Well, friends, it's been an absolutely crazy day and an absolutely crazy week. We have the stock market dropping another 1.7% for the S&P today, and the NASDAQ dropping 2.6%. A lot of red out there as things come crashing down. And for the week, it's been a bad week for the stock market as well. We're going to talk a little bit about that. We're going to talk about how the Oracle of Omaha, Warren Buffett, has been getting ahead of this thing all along, and he's continuing to sell, and that is very unusual for him. Let's talk about what's going to happen next, what may happen next week with the market, what happened this week, and kind of why it all happened. I know a lot of you guys have retirement funds and investments in the stock market. We're going to talk about those things. Let's jump into it. Welcome to the Poplar Report. I'm Steve Poplar. I'm an accountant by trade, and these are the things that are going on out there, giving you the truth and talking to you frankly about it. All right, so the S&P dropping today. This week, it lost a total of 3.7%. And this week, the NASDAQ came down 5.9%. The NASDAQ being more tech-heavy and the S&P being a little less tech-heavy, right? But now it's like everything's tech-heavy because just the way things work. But so since July, Warren Buffett and his Berkshire Hathaway have been dumping stocks, particularly Bank of America, but they've been dumping a whole bunch of other stuff too. They've been having a fire sale on Bank of America. They've dumped $7 billion worth of the stock of Bank of America. What do they see coming? That's the real question. Now, Warren Buffett has always been a guy saying you shouldn't have cash sitting on the sidelines. You should always be invested. You should stay invested. You should buy companies that are bargains. You should buy them when everyone is selling. And the only time he says that you should stock up money is when basically you know things are going to get bad. And so now we see Berkshire Hathaway selling billions and billions of dollars worth of Bank of America stock. Honestly, they've been selling this week. They sold $900 million on Tuesday, $900 more million on Wednesday, and $900 more million on Thursday. We don't know how much they sold just earlier today because that report won't be out until next week. But basically, they're selling so much of their Bank of America, it's changing their stock ownership or the ownership level inside the company, so they got to report that. And so that's why we're seeing this happening because they own such a large stake in Bank of America, or at least they used to. So why in the world did the stock market go down today in the first place? Well, supposedly it went down because the jobs report was not what the market was hoping for. Now, supposedly they added 140,000 jobs in August. You and I both know that the numbers coming out of the federal government can't be trusted whatsoever. You just look at the massive revisions they had earlier this year. But even if you just pull back a little bit and look at the numbers overall, you'll see that they just don't make sense. They don't make sense, and in the broad scheme of things, things are still bad. So supposedly 142,000, they were expecting like 165,000 or something like that. And so it disappointed the market a little bit in the fact that not as many jobs got created. But, and here's the kicker. We're right now in a position where bad news is good news. And this wasn't real bad news. The market was really hoping for a real bad jobs market number so that the Federal Reserve next week, 2 weeks, will really be pressured to cut rates, right? The September meeting of the Federal Reserve, the market is super excited about seeing interest rates cut, and the Federal Reserve unabashedly says that they really look hard at the fake jobs numbers. I mean, the jobs numbers that come from the government. But yet I repeat myself, right? So this wasn't great. This wasn't real bad. It was kind of not enough. it was not good news, but it wasn't bad news enough to get the Federal Reserve to cut rates. And then we got the kicker, which is that the unemployment rate supposedly decreased, which, again, these numbers are stupid. And yet, this is what the Federal Reserve is supposedly looking at in order to make the decision of whether to cut rates or not. And cutting rates is basically like a sugar high, and the market is like a 3-year-old, okay? The market is super excited for the sugar rush. Of course, we always see that the market crashes happen around the same time that the rate cuts happen. So that plus market crashes have a tendency to happen in September. That's not good news as we're going into, or we've been in, a recession, depending on how honest you want to be. If you want to be like government lying about it, then you're going to say that we're entering into a recession. If you want to be honest about the numbers, we've been in a recession since 2008. So there's that. I mean, if you want to take the government spending off of it, we've been in a recession since 2008. Our GDP has been in decline since 2008 when you just look at private businesses. So, with that said, a recession that we're in or that we're going into, the stock market at all-time highs, it just doesn't make any sense whatsoever. And there you see Warren Buffett, the Oracle of Omaha, and his Berkshire Hathaway investment company, who have been very astute and very aware of things and known things before they happen and just made really smart business moves for many decades, are sitting there and they're just pulling money off the table like nobody's business. They're now sitting on almost $300 billion of cash. This coming from the guy who says don't hold cash. He's holding almost $300 billion worth of cash that he's waiting for the market to come down so he can then buy back in. So should we take note of that? Should we take stock of that? I think that you'd be kind of foolish not to. 300 million. But let me just put this in perspective here. Since 2019, let's talk about jobs. Since 2019, Americans have lost 1.4 million jobs. If you're an American citizen, of all of us American citizens, we've lost 1.4 million jobs since 2019. That's not moving in the right direction. I know Kamala Harris and Biden and everyone else is out there from the left saying how wonderful things are, but 1.4 million jobs less. And they won't say those numbers. Why? Because 3 million people from other places who aren't citizens have gotten jobs in that same period. 1.4 million people from the U.S. have lost their jobs and been replaced by 3 million people from other places. And you can see how that might make some people in the United States feel less good about things, right? I mean, if we're so short on jobs that we need to lose people, well, then why are we bringing people in? If we're replacing people with cheaper people, I mean, there's really no way to read that other than that, isn't it? I mean, we used to export our jobs to China, but now we're not outsourcing them, we're insourcing them by bringing people to us. So we got Warren Buffett out there, clearly thinks something bad is going down. We got the jobs numbers showing things are bad. Anyone who has a pulse can see for themselves that inflation is a lot higher than what we're being told. We just had Special K go out there and said something along the lines of inflation is the lowest it's been in 3 years. Yeah. Don't want to talk about the lowest in 7 years, do we? We can't do that. We can't talk about the previous 4 years. We can just talk about the last 3 years and how bad it's been. It's better than what it's been this past bad period. That who's been in charge of that? That's the question. Who's been in charge during the last 3 years? So just because you've improved your F to an F plus doesn't make this a rock star economy, okay? If you want to compare this back to the Reagan years, if you want to even compare this back to the Clinton years, you're going to fall kind of short. The fact is that Americans who want jobs can't get them. And people from Saudi Arabia and China and elsewhere that come here without properness are getting those jobs. And if you see a problem with that, well, then there's a problem with you, apparently. If you see the truth of things, then there's a problem with you. I swear. That's where we're headed. All right, friends, that's what I got for you. Hopefully that makes sense of what's going on out there. The real issue is going to be whether we get a 25 basis point or a 0.25% rate cut here in September, or whether we get a 0.5% rate cut or 50 basis points. And that's all the discussion out there in the stock market is. Everyone thought we were going to get a 0.5%, and then suddenly it's like they start realizing, because of some of the people that spoke out there, Federal Reserve people, that it sounds like we might be actually getting more of a 0.25%. And that's a lot less sugar for the market to handle, and that caused a bit of a ruckus out there on the stock market today. We'll see if this continues on Monday. But let's just say this way. Until people really start to panic, we're not going to see a big drop. And the first thing that needs to happen is people need to realize that the stock market isn't going to go back up. Once people see in the charts that the stock market's not going to just go right back up to new highs, then people are going to start making decisions like, well, maybe I should sell and wait this out. And a lot of people thinking that causes the market to go down a lot more. And that's kind of where we are. Everybody thinks the market's going to go up. But now with the recession, with the rate cuts, some people like Warren Buffett are like, maybe this isn't going to be a good season for us to be in. Let's take our chips off the table and wait this thing out. So smart money has been fleeing over the last month or more. Hedge funds, big investment banks have been pulling their money off the table, and normal everyday folks, retail investors like you and I, have been statistically dumping our money like nobody's business into the stock market. Retail people are called dumb money, okay? And the smart money, the hedge funds, the Warren Buffetts, the investment banks, they're called the smart money, and the smart money has been leaving. Their dumb money has been picking up the chips in their place. And dumb money has a tendency to be the ones left holding the bag, okay? When you rob a bank and suddenly everybody wants to give you the bag of money, either you're rich or you're about to get busted, okay? And that's where we are right now. So could the smart money be triggered to come rushing in and drive the market to all-time highs? Yes. Or the dumb money could be wrong and could get left holding the bag. So if you have retirement in the stock market, as I've suggested and urged to consider putting some of your investments into silver, gold, or precious metals of some sort, like through Genesis Gold, or to just get into cash to protect yourself. Now, cash is going to lose its value slowly over time, but compared to how fast the stock market's probably going to go down in the near future, it might be a good option to do. That's what Warren Buffett's doing in the temporary, right? All right, friends, thanks so much for watching. If you want to check out another video from this channel, there's one right up here. If you want to get some more information from Genesis Gold about what you can do with your retirement account to make it a little safer as we see the stock market starting to falter here, there's a link right here on the screen. Thanks so much for watching. Steve Poplar of the Poplar Report.